Welcome back, and joining me with more insight on the day's trade is Lindile Malgas from ABSA Investments. Lindile, thanks so much for your time today. Maybe let's start with your reading of markets action. Global sentiment downbeat. We've seen markets lowering bets for a Fed rate cut come December. That tech sell-off still pushing through, with a number of investors rotating out of that sector on the back of higher valuations and also concerns around a tech or rather an AI bubble.
Yes, so certainly we did see markets in the US sell off yesterday, so down about close to 2%. And markets are a bit concerned about where valuations are currently, particularly in the tech space, where you are seeing quite a lot of capex spent and no clear road path in terms of how we expect these companies to monetize. So on the back of that, it did make markets a bit nervous, and we saw some of that sell-offs. And then looking at our local markets, you are also seeing that filtering through, with the JSE also down about 2%, and we are seeing the majority of that is coming from some of the resources sectors, but overall are seeing all the sectors being down so far today. So markets certainly a bit more nervous this week.
And how concerned are you about that Fed story, right? At the previous Fed meeting, Chair Jerome Powell did warn that, the December rate cut is not a given. And we've seen slowly but surely markets somewhat price that in and lower expectations. We also have the delay of the October economic prints. Some White House officials even saying that we might not even get these numbers, and questioning the reliability of it all. How important are those figures to, the next Fed meeting? And are you pricing in another cut?
Yeah, so darling, I think those numbers are very important to markets and also very important to the US Fed as well. As we've seen throughout the year, they have been driven by a more data-driven approach when it comes to the policy-making decisions that they've made so far. We have seen inflation tick up a bit within the US, so markets also remaining a bit cautious around that and whether or not the Fed will have enough room to cut. We are seeing those probabilities in terms of a December cut starting to fade away, but overall still seeing markets pricing in a cut of about 25 basis points, but it does remain data dependent, as we've seen. And ultimately, with the US shutdown only being lifted this week, it will lead to a delay with some of the data. And then obviously the key components of that will be the inflation print and also the unemployment figures, which are some of the key stats that the US Fed looks at in terms of determining some of that monetary policy decision making.
And let's bring it back home with monetary policy in South Africa. The SARB due to, make an announcement next Thursday. What are you pricing in on that front? Many economists say that, we are at the end of the 2025 rate cutting cycle. We also had that inflation target being lowered earlier this week in the budget.
Yeah, so from a South African perspective, we're certainly not seeing any further rate cuts for this year. We do think that we are also at the peak of that easing cycle and expecting some cuts at the start of next year. You have seen the National Treasury lowering the inflation target to about 3% with a band on either side. And the implications for that is to sort of keep the rates where they are so that you can get inflation more or less closer to the target. We are expecting inflation for this year to reach about, or peak about 4% for the fourth quarter, and then with the monetary policy remaining at around 7%, we are expecting that to gradually lead to inflation easing towards that 3% target. So certainly not expecting a cut within this meeting and expecting a cut somewhere in the first quarter of next year.
And talking expectations, just off the back of that midterm budget policy statement, right, there was a lot of optimism, and that of course led to a rally in local assets, whether it was in equities, in the rand, in bonds. It was really, firing in all cylinders. On that front, right, we also then have expectations of a ratings upgrade from S&P Global. Where are you sitting on that end? Do you expect good news out of that update?
So I think in terms of that S&P rating decision that we are waiting from today, there is scope for us to see the ratings being improved from what we've seen. But our baseline case is for the S&P credit rating agency to keep it at the BB minus, and also keep that positive outlook that they've had. Normally, they've said for non-stable outlooks, they tend to have a 12 to 18-month window before they make any major decisions that may affect that rating. But we certainly do think that there is scope following the midterm budget. But again, we also think that they would like to see a bit more credibility around the economic reforms and also in terms of the fiscal consolidation path. So giving that a bit of time before they make a decision on that.
All right. So against that global and local backdrop, where are you seeing value at the moment? What's your stock pick?
So my stock pick currently is a Nike. I think it's a brand we all know and love. Still carries a strong brand heritage. It has been under a bit of pressure due to a bit of strategic missteps that we've seen at the company. So they're moving away from the wholesaler model, which did hurt them a bit with some of the wholesalers, your likes of your Dick's Sporting Goods. And then we've also seen the company reinstitute a new CEO who sort of led the company back to its root, already starting to see some of the positives of that strategy that is instituted in place with the first quarter results. Those were quite well received by markets, and we think that there is quite a huge potential for this story to turn around quite significantly. We've seen the company also put in some changes from a innovation point of view, which they had been lacking, your likes of your On, some of the newer entrants, your likes of your On and your Deckers Outdoor. So they have brought a bit of innovation within some of the running shoes, which they were known for. So we think that there is a bit of value in the stock at the moment. Of course, there does remain some headwinds, your likes of your tariffs, your likes of your macroeconomic trends. But we think at these prices where the company is at, the risks are more or less balanced to the upside.
Let's leave it there. Lungile, thanks so much for your time and sharing your insights with us today. That was Lindile Malgas from ABSA Investments.